Let's take a look at the business scene now. On Friday, Nigerian stocks ended a dismal week with a loss of 749.8 billion naira as the main equity index fell 1.21%, led by a sell-off in bank shares. The banking index, the benchmark that measures the top lenders by market capitalization and liquidity, has been in free fall since the start of a trading week because bank equities have had a particularly tough time finding investors. The all-share index fell 633 points to 51,778.1, while the market cap fell to 27.9 trillion naira. Now, the index has returned 21.2% since the start of the year. And now, as usual, we'll be joined by Aziz Lawal on News Central, the Managing Director, Trust Bank Asset Management Limited, to further give us a breakdown of the market. Very big thank you for joining us, Aziz Lawal.
Yeah, good morning. Thanks for having me.
All right. Now, as always, we'll start with the bullish and bearish movement of a market. Now, the bourse closed on a bearish note last Friday. Is this still in response to the latest inflation figures from Nigeria, or is it something else?
Yeah, once again, thank you. Yeah, so I mean the performance we saw of the market last week. I mean, of course, inflation is a factor. Typically, when inflation data comes out like that and is surging, definitely you see reclassification of portfolios by asset managers, basically to see how they can beat the inflation levels. But then largely what we're seeing is more of the bearish sentiment that we've been seeing in the last couple of weeks. So coupled with it, supported by the fact that, I mean, the market has been quiet generally, and the few activities that we have seen are mostly bearish, and we expect that to continue into the coming weeks, at least until we start seeing second quarter results. Thank you.
All right, so looking at the bearish movement of the market, what investment insights do you have for the audience considering the local and global monetary policy realities?
Thank you. Local and global monetary policy reality is that as much as we can, we should all avoid risky assets. But then it's not a good time to do equities. It's safer now to go into money market instruments. I mean, any investment that is very near cash, it's better to hang around returns that will give you instrument that will give you fixed income returns around between 5 and 10%, than to seek investments that will give you more than that, but then you're not sure of your capital. Stay away from instruments like Bitcoin. Bitcoin is still on the way down. These are not times, because typically we hear that Bitcoin is a hedge against inflation, is an uncorrelated asset. But then we have seen in the past couple of weeks and months that it's actually a correlated asset and it's not a hedge against inflation. So, I mean, the summary basically is the fact that we should avoid risky assets and stay with cash or near cash investments like money market instruments. Thank you.
Thank you very much, Aziz, for that insight. I'm sure it's going to make trading easier. Now, a last question before we let you go here. What should we expect on the fixed income market for this week?
Yeah, for the fixed income market this week, the theme of the week is basically going to be the auction. There's the bond auction scheduled for today, where there are three maturities. The typical bond maturities will be auctioned today. The DMO 6 to raise over 200 billion from those three auctions. So the outcome of the auction today will give a cue on how the secondary market will play for the rest of the week. As for treasury bills, we expect that there will be sell-offs, particularly as the liquidity in the system has significantly shrunk. So we expect that local banks will sell to strengthen their cash positions. Thank you.
Thank you so much, Aziz Lawal. It's always a pleasure having you on the news with us.
Yeah, thank you for having me. Thank you.